Former Secretary of the Treasury, Timothy Geithner, who's written what I don't have a physical copy of. Do you have a physical copy of your book on you?
I don't, alas.
But it's an actually excellent book, I will say, having read it over the last few days while I've been here, called Stress Test, with co-author Michael Grunwald. And I don't know, how many of you have actually read the book? Significant number. How many of you intend to read the book? I hope you all bring it up. How many of you happen to see the review that Michael Lewis did in the New York Times about 2 months ago when it came out? Sound, okay. I believe the sound is on. Okay. I'm talking as loud as I prudently should if the sound engineers can make any relevant adjustments.
There we go.
A point that Michael Lewis made about Timothy Geithner's book with Michael Grunwald, Stress Test, is that simply as a book, it is really interesting and appealing. The normal subtitle, the real subtitle of most books by former Washington officials is, "If only they'd listened to me." And that is, in fact, not the tone of this book at all. It is very funny. It's funny in talking about the financial crises that former Secretary Geithner has been through, first at the Fed and then at the New York Fed, then the federal level. It also is charming in presenting himself as a character. And while there is this implied grandiosity of many DC books, this is a fairly typical specimen of how the Secretary presents himself. This is about his first major speech as Secretary. You probably remember this part. It's fair to say that the speech did not go well. I swayed back and forth like an unhappy passenger on an unsteady ship. I kept peering around the teleprompter to look directly at the audience, which apparently made me look shifty. One commentator said I looked like a shoplifter. My voice wavered. I tried to sound forceful, but I just sounded like somebody trying to sound forceful. And he goes on to say, it's never a good sign as a Treasury Secretary when the stock markets plummet while you're on stage, which is so. And he has wonderful stories about such Aspen favorites as Barbara Streisand, which I'll let you volunteer later on if you want, and Larry Summers, who I don't know if he's still here. I'll just mention one of the nice asides about Larry Summers, who was then head of the Economics Council and had been one of your patrons overall. This is, you had prepared some kind of memo, and Larry said that had been subject to various kind of criticisms. Larry said he didn't agree with those critiques, though, as always, he had an endless list of things that he could have done better himself. and so I recommend it just for reading value compared with the normal Washington memoir. This is to most Washington memoirs as U.S. Grant's memoirs are to most presidential retrospectives. Also, I think what you might not know without reading the book is essentially it is a war story. It's a story of essentially dealing with the financial crises of 2007 onward, and it is cast as a successful war story. This may be non-intuitive to many members of the public or here, but it's cast as a group of people, among whom Secretary Geithner is more and more at the center during the Obama administration, who are working around the clock, making last-minute decisions. There's one moment where, which holiday was it that required Mitsubishi officials to deliver a $9 billion check in hand to some bank?
Columbus Day.
Columbus Day. So people carrying $9 billion checks. And he makes the case that this was one of the Obama administration's great achievements for which it will not be recognized. And we'll come back to that and whether that's actually a plausible case. But first, I'm going to ask Secretary Geithner to set out the main claim. He's saying that at the beginning of the book, throughout at the end, that this was a successful battle and that in ways people will never appreciate, the managing financial crises was something we should be proud of. Make the brief version of that case.
Okay, thanks for what you said about the book, Jim. This was a classic financial panic. Financial panics happen really rarely to individual countries. Our last one was in the Great Depression, but they're the most devastating of financial crises. If you let them burn, you let them run, they end in depression. You can lose a decade of economic growth, and you see soup lines, bread lines across the country like we did in the Great Depression. It's not a hypothetical thing, because we've had, tragically, lots of experience across decades, across centuries, in the mismanagement of financial crises. For perspective, it's worth remembering that in the fall of '08, when our crisis was burning so hot, the financial shock that hit the economy then at that point was 5 times greater than what the U.S. experienced at the beginning of the Great Depression. And again, just to go back, in the Great Depression, unemployment went to 25%. It took a decade before growth sort of began to recover in a meaningful sense. And in the decades that followed that, not in the United States, but in countries around the world, we saw similar types of financial panics end in Great Depression. So hard to make this case. Barney Frank said once that you can't run for office saying it could have been worse, but it's not a hypothetical risk. In the fall of '08, the dominant conventional wisdom among people in finance and economics was we were going to face the Great Depression. I remember on a first conference call we had with the president's incoming team, with the vice president, chief of staff, Larry Summers, and me in the fall of '08, after the election, we were discussing his economic agenda and what he should be for, his first term, what he had to do. And I said, you know, you're going to have to prevent a second Great Depression. Nothing's possible without that. That's the most important measure of what the president did, or actually it was what two presidents did over two administrations in a period of about 9 months, is that we were able to avoid the mistakes that most countries make in financial crisis, adopted a dramatically different strategy through overwhelming force at a major financial panic. We prevented a Great Depression. We got the economy growing again in 6 months, remarkably quickly. And all the disappointments we face today as a country, weak economic growth, unemployment still very high, a lot of damage still left over from the crisis, high unemployment, very high rates of poverty. Those things are all true, but that weakness of the response, the recovery, are mostly a function of the fact that fiscal policy turned too tight too soon. And we had a bit of trauma from Europe in that context. So best measure of success, we prevented a Great Depression at much less cost than anybody anticipated. You know, people said, Jim, you remember this, in March, even March of '09, people said, these guys have no idea what they're doing, they're going to lose $2 trillion on the financial rescue. And the financial rescue is going to earn, you know, between $100 and $200 billion for the American taxpayer. S&L crisis was a tiny, quaint little financial crisis. You almost couldn't see the effects, mild recession. It cost 3.5% of GDP. We're going to earn, because we adopted a dramatically different response, we're going to earn a positive measure. That's not the best measure of success. You know, did we earn money for the taxpayer? It's a pretty remarkable thing. Not the best measure. Best measure of success is economy was failing, it was falling at an annual rate of 8% in the fourth quarter of '08. It was growing again in 6 months. You'd never seen anything like that in history. Nothing like that in the record of response of governments to financial crises in the 100 years, the 70 years that followed the Great Depression, certainly not in the centuries before that.
So we'll come in a moment to some of the themes you touch on, the lasting problems, you know, even after this crisis, the way in which avoiding disaster is sort of a leitmotif of the Obama administration in general. I wanted to first touch on something you mentioned, saying it was two presidents who were dealing with this crisis. To me, a very striking thing about your book is that almost half of the war stories were before President Obama took office, when you were working with Hank Paulson and others, when you were the head of the New York Fed. Tell us about what was similar and what was different in the George W. Bush approach and the Barack Obama approach to containing the crisis.
I think I would say the most similar thing, although, was that both presidents basically were willing to put the near-term political costs of the rescue aside and let a small group of people, at that time it was Paulson and Bernanke and me, mostly us, try to figure out how to put out the fire, knowing it would be deeply politically costly to do it. You know, it's again, it looks like you're rewarding the arsonist. The only way to break panics, prevent panics from leading to Great Depressions, is by making sure you keep lights on in the financial system, so people don't lose the value of their savings. You don't see a broader collapse and ability to borrow, businesses to function, and that requires doing things that are just deeply morally offensive to the average person and to any self-preserving politician. But both those presidents, they were willing to, and they recognized that, they're willing to put that constraint of politics aside, at least temporarily, and give us the room and the authority to do what had to be done, to do the essential thing. It wasn't going to solve all the country's problems, but it was the essential thing.
So I mentioned earlier that your book has one sort of ongoing picaresque tone about your own adventures, finding yourself fighting all these fires. The other main tone is a counter-conventional wisdom tone. You're talking, you know, both in the perception of the Obama program in general and operationally in dealing with crises. And a paragraph that I've quoted here, which appears in different forms 10 or 15 times in the book, is that you're talking about these sort of get tough actions, not the Old Testament part, but sort of tightening the belt. Get tough actions would feel resolute and righteous, but in a time of uncertainty, they would damage confidence and accelerate the downward spiral. Could you elaborate on your central theme that what you all had to do to contain the crisis was what to most of us in the public seemed crazy or wrong?
The reason why financial panics happen and usually cause so much devastation is because what's essential and necessary to do in breaking them is so counterintuitive, paradoxical, politically contentious, averse. And so most governments, most politicians, they face the fire, and their initial instinct is to say, well, let's let it burn because it's going to consume the irresponsible. And it's not going to affect the average person. And maybe it'll cure itself. And I don't want to take any risk. I don't want to take any financial risk. I don't want to take any political risk in looking like I'm rewarding the arsonist. And so most governments, they sit back for a time in what they think is the cautious, responsible thing. And it's immorally irresponsible choice in that context, because if you let it burn, it'll consume the country, as we saw in the Great Depression or in any number of financial crises in the decades that followed. So in a financial panic, what it takes is just so deeply counterintuitive. You have to go in and protect people from failures that they made on their own knowingly. You have to go take a huge amount of risk if you're going to protecting the economy from much more risk. And those things are just, people want you in that moment of panic. They want you to just remember what it was like in the even Monday after Lehman. The Wall Street Journal. We were at the edge. We were at that point. Probably in the. At that point, it probably was a Great Depression style financial panic. Wall Street Journal editorial page, New York Times editorial page, that morning after Lehman said, "Thank goodness Lehman failed. That was a just thing. That was the dominant conventional wisdom." So if they felt that way, think what the politician felt. Average politician felt like no chance, no more bailouts. They thought the biggest risk to the country was to enable more bailout things. So it's an understandable human intention, reaction, aversion. Partly it's about moral hazard, partly it's about Old Testament justice. But it's the wrong instinct in a panic if you want to protect the average person from the risk of mass unemployment, a decade loss of income, losing all the value of their savings.
And near the end of your book, you say that despite all the things you personally dislike about Washington politics, that we collectively dislike about Washington politics, you said that in the end, the Washington system recognized the right way to deal with these crises. Can you talk about that point in general? Any specific politicians who either got or did not get the point you're just making about response to crisis?
Well, let's go back to just the politics around TARP. Paulson said it was less popular than torture. Just a repellent thing to ask a politician to do. And the Republicans, as you know, maybe understandably at that point, basically ran from it. So in the House, for example, Speaker Boehner, who committed to support it, lost, I think, more than 2/3 of his caucus. But Barney Frank and George Bush, unlikely allies. Nancy Pelosi, Harry Reid, George Bush, unlikely allies, but they did come together and they crafted a pretty messy, ugly bipartisan consensus to provide the authority we needed in the end, at least the first stage of the authority we needed to put out the fire. Again, it's a terrible, messy, ugly, depressing time in American politics. But despite all those limitations of our system, such obvious limitations we're still living today, in a relative sense, if you compare to how the Europeans handled the last 3 years, or the 3 years of the initial years of the crisis, our institutions, like they have been, Churchill famously said, over time, they were able, in the moment of extreme peril, to figure out a way to provide the authority and the tools necessary to protect our country and the world from a much more devastating disaster.
Still on this theme of your challenge to conventional wisdom, you mentioned that immediately after the Lehman failure, even the Wall Street Journal was saying this was just a couple of years later, conventional wisdom became, oh, why didn't you save it?
Exactly.
And so give us your view on that, which is very different.
I mean, on the Lehman example.
On Lehman example in particular.
Okay, the United States of America, most powerful, most important financial system in the world, went into this crisis with terribly weak tools. I told the president it was like duct tape and string in that early stage. Why was that? It's because over the decades that followed the Great Depression, we had a financial system outgrow all the protections of the Great Depression. So banks became something like 40% of our financial system, not 80%. And a huge amount of risk was outside the banking system in investment banks and AIG, GE Capital, Fannie and Freddie, a bunch of other institutions. And those institutions not only had no constraints on risk-taking that were meaningful, but they had no access to the protections you need in panics, the protections against runs. So we went into this crisis without the tools to contain the risk of a broader run on that part of the system. That made the crisis much more dangerous to us, allowed it to get much more momentum ahead of the problem. And we went into that weekend, Lehman weekend, with no ability, no legal authority to put capital in banks, no legal authority for the Fed to guarantee the liabilities of investment banks, and therefore no options in the absence of a willing buyer to prevent the devastation that followed the collapse in a panic of a major institution. So in the earlier case of near failure of Bear Stearns, smaller institution, system more fragile but a little less fragile at that time, we had a willing buyer able to do it. We were able to help make that happen. In the Lehman case, in the end, there was no willing buyer because Lehman was bigger, more risky, the world was much more fragile. And the British, the last suitor at the auction was a British bank, Barclays, and the British basically grabbed it by its neck and pulled it back and said, we don't want you to buy that institution because we don't think you're strong enough to handle it. And we were left without authority in that context. But it's a very important thing because, and it tells you a little bit about the perils of conventional wisdom. Conventional wisdom was mostly dumb and terrible in this crisis. And because you're right, people went from saying that you should let this thing burn, no more rescues, to why didn't you guys go rescue a bunch more people? It just shows you the perils of it. But we went without the tools. TARP fixed part of that, and the authority we got after TARP fixed the rest of the authority limitation. We had better tools to manage it.
And to be clear on this point, you're saying now that Lehman could not have been rescued.
We had no legal option at that time in the absence of a willing buyer to rescue Lehman. You can ask a different question, which is, okay, if you're not asking this, but if we had full authority going up, what would we have done? That's a more complicated question. Because your job in a financial crisis is not to save everybody. Your job is to do enough that you hold the system together so you don't see the devastation of hundreds of thousands more businesses failing, or people losing their homes, or people losing their savings.
So I'm now going to ask about the main critique of your book, of your time in office, of the Obama administration's overall financial policy, which is essentially coziness with Wall Street. And let me put it this way. You write charmingly in the book that there was a time when you thought the adjective embattled was part of your official name. You embattled Treasury Secretary Timothy Geithner. I had a sort of similar reaction to the use of Old Testament as a descriptive adjective in your book, that whenever something comes up about people wanting to have accountability for bankers, for financiers, you would describe this as Old Testament morality, as populist excess, and you seem almost irritated by this argument. Tell us how you view the proper degree of public and political resentment, outrage against the excess of the financial system, and why you couldn't take that into account in your policies and decision making.
I'm a big believer in the Old Testament, and the basic reaction most humans had to what they saw happening in finance was justified and understandable, and the amount of anger provoked by the devastation of the fall is completely justified. And it was just and essential for the American people. Not just to put out the financial fire, so you protect them from a Great Depression, but to change the rules of the game, provide a measure of accountability, reform the system, so reduce the risk this would happen again. So I'm in favor of accountability. I was a strong supporter of a stronger enforcement response. It wasn't my job to be the arbiter of those questions of who goes to jail. I didn't have that authority. That was somebody else's responsibility. But it was a very important part of the government's response. When I say that the Old Testament instincts in a panic and the moral hazard fundamentalists in a panic are instincts that are understandable but counterproductive in a panic, I'm just saying in that moment when the fires are burning, you can't indulge them. Because if you indulge them, you'll do much more damage, again, to the innocent victim in that context. So I'm for accountability, in favor of it, worked very hard to change it. And let's just do the other side of the critique. There's a large part of the American political system, there's a large part of the American financial community, significant part of the business community that thinks we, ended financial capitalism, that we put in place a unjust, I find this implausible, but I'll just say it, there's this other critique that we did too much, not too little, and have completely undermined the incentives for running a sensible institution today. I don't agree with that, but there is that critique too. So you're going to get it from both sides. To say the fact that you get it from both sides doesn't mean you were right. It's a weak argument to make, because if the left and the right are criticizing you for different reasons, that you must have gotten it right. I try never to make that argument. But it is important to point out that...
It does sometimes creep into the book.
Well, there's many things that creep in. But I'd say they were mistaken in their criticisms, even though they were understandable criticisms. But I try to say, not just because they were opposite in their approach doesn't mean that we were right. We just tried to figure out and navigate the messy, uncertain task of making good choices with bad options from a position of essentially pragmatism, which is what was going to be the most effective way to get the economy growing again and reform the system.
As a side note, on the Old Testament front, you have a wonderful little aside about Barbara Streisand in the book. Would you care to recount? I can recount it for you if you...
I was at a state dinner, I think, and she came up to me, or somebody introduced me to her, and she said, I've been watching you, and I don't think you're telling us everything. and I said, of course you're right. It's much worse than you think. But she said, but then she said, but of course you're a Jew from Brooklyn, so you're probably okay. Neither of those two things were true either, but.
And our last dip into the Old Testament well, this is a sample sentence that in a way distills this part of the argument of the book. Old Testament vengeance appeals to the populist fury of the moment, but the truly moral thing to do during a raging financial inferno is to put it out. Let me use that as the segue to the next main point you make, which has to do with explaining various kinds of morality and all the rest. When you're talking about, you've made the long case why, from your perspective, the two administrations really did the right thing in trying to protect the American economy, did better than Europeans or anybody else. Then you say, we never found an effective way to explain to the public what we were doing and why. We did save the economy, but we lost the country doing it. Explain more about that and why President Obama, the famous orator and explainer, has not fell into that situation.
I think it has two fundamental causes. One was, again, we went into this crisis, no memory of Great Depression. I mean, not no memory. I did a book thing a few weeks ago for Politico. Mm-hmm. And after the event, Ben White's mother came up to me and said, my parents lived through the Great Depression. I remember what they tell me about that. Mm-hmm. It's not that implausible. So it's not there was no memory, but there's basically essentially no memory. And what that means is that hard for people to appreciate that it could have been so dramatically worse than it was, because our recession following the crisis was the worst recession still since the Great Depression, terribly damaging, deeply unfair, indiscriminate damage in that context. So I think the first reason why it was so challenging was not that the president was not a good orator and not that he didn't have the right incentives in that context to get it right, but it's a very hard thing to explain to people. And I think the more fundamental problem is the stuff we had to do to protect people from that possibility of a worse outcome was so deeply offensive, so morally offensive. Again, it looked like, people thought we were giving money away we'd never see again. They didn't understand that it was a set of loans and investments with a fee, and we were going to recover most of them, which we did, with interest. But to most people, it still looked like you were protecting the arsonists after they had caused a huge amount of damage. Is that something you could have explained better? Oh, I'm sure we could have, but I'm not sure we could ever have convinced them. I tell a story about another journalist who said to me on TV once, or outside TV, she said, I went to one of the Occupy Wall Street movements, and there was a protester with hiring a sign against TARP, mm-hmm. the bank bailout. And she said to this protester, well, did you know that the taxpayers earned money on the investments in banks, recovered all that money and earned $20 billion? And he said, no, I didn't know that. And she said, well, if it were true, would it change your view? And he said, yeah, it would change my view. But still, I don't think it changes people's views fundamentally. I mean, it's a factual thing today, that the government recovered the money. Did it ease the sense of outrage and pain? Not so much, I don't think. So I think my answer to that question is this is not to be self-exculpatory or to take the president off the hook. Let the president off the hook. It's just that it's a pretty challenging thing to explain in that moment. Yeah. And we thought we were at the edge of complete collapse with no good options and no time. And we put the principle of action and the responsibility of action ahead of explanation. And we bear the scars of that.
I'll ask you one more thing on this point. I was having lunch with somebody yesterday and told this person I was going to be interviewing you this morning, and the person said, well, gee, what I'd like to know is whether anybody making these decisions had any real connection with the rest of America. You've grown up around the world, you have a varied background, but the decision making in your book, which is so riveting, is all you're talking with the heads of different Wall Street firms, different people in DC. Was this a factor either in real time or in retrospect that there wasn't enough connection to the rest of the country and how they were viewing these decisions?
I hear that a lot from people, and I understand why they might think that, but I feel like it's sort of unfair to the motives of the president in particular and the people around him in that context. So let me give you two countervailing things. I mean, all of us had relatives or knew people who lost their job or might have lost their home or lost their business in this crisis. The effects were so pervasive, there was nobody who didn't have direct personal experience. Even, we all had jobs, we were very lucky. But there was nobody in the country, I think, didn't have direct personal experience of people who were affected by that. But also, I grew up. My entire professional life, all my formative experience in professional life, was watching countries mismanage financial crises in emerging economies and seeing the devastation that imposed on their economies. And my entire instinct about how to do financial crisis, born of those, seeing the human cost of crises, what motivated, at least the views I brought to our response in that context. So it's the opposite of that presumption. It was the knowledge that panics produce Great Depressions, which produce mass unemployment and soup lines and bread lines, that animated and was the motivating factor for us doing the opposite of what most governments do, and put together a much more dramatic financial rescue. Just one other fact that's worth pointing out. The scale of what President Obama supported in terms of, let's call it, the economists call it fiscal stimulus, but what is that? That's tax cuts, and it's unemployment insurance, and it's expanded food stamps or disability payments, or it's infrastructure spending. The scale of those things over those 4 years of his first term, although inadequate relative to the size of the problem because Congress was against more, were very substantial. $1.4 trillion, much more substantial than when attempted in the past in that context. So again, it's not, the conventional wisdom still is that this group of people, not me, but many of them from Wall Street, in isolation of the needs of the average person, went and designed this unjust bailout of a bunch of arsonists and paid no attention to the concern. It's unfair, it's the opposite of the basic instinct that judged this. The only purpose for the rescue this dramatic was to prevent more devastation to the innocent victim of a financial crisis. And that financial rescue was complemented by a very aggressive, at least in its initial stages, set of other economic policy measures to try to get the economy growing again quickly. And the scale of those things, not the rescue itself, rescue is unprecedented scale and scope and design, but the scale of the other things we did directly to get demand into the economy, write checks to the American people, the scale of those things were very dramatic compared to what any government in modern history has attempted in a financial crisis. Not enough, because the panic was so bad, but still creative and dramatic in that scale.
So you convincingly make the case here and in your book that it is because you'd seen the world, you were trying to prevent these crises. I'm curious about your counterparts who are heading these financial institutions. Some of them, you say, were more concerned about protecting their executive compensation as part of the deals that the government was structuring. What was the ratio of people who were the financiers in their sympathizing with the larger goals you were pursuing versus just their own self-interest?
It's hard to tell. That's like in most professions, there's a pretty diverse mix of talent in those institutions. Some of them pretty knowing and aware, and some of them not so much. I think on balance, most of them viewed themselves as, I would say, victims of larger forces beyond their control. Once in a century flood, once in a century panic. Not that self-aware. I think they felt that. I don't want to make their case for them.
Okay. Now, some things about you. There's a quote that Michael Lewis also cited in his review, and it really struck me when I was reading it, from Mervyn King, the Bank of England. He said, "Tim was present at all the crises, but he didn't cause the crises. The crises caused him." And you say about yourself a number of times that you say, "I've always been calmer in motion than in repose." You like always moving forward, sort of shark-like. You feel like you have to be going forward to survive.
Shark-like, that was so polite of you.
I was having a nice whale shark, a benign or a nurse shark, not a great white. And you have a very, very striking parallel to the movie The Hurt Locker, of saying that there was something about being in this enormously high stakes situation that you actually enjoyed. Tell us about yourself as a manager of crises and how you grew during this period.
Enjoyed would be not quite the right way to say it, because it was terrifying and hard, and well, terrifying. Terrifying because there was so many times when I didn't know what we could do, and I wasn't sure we'd be able to do enough. But what I learned to do early in life, early in my professional life, was just try to focus on relentlessly on this basic question about, okay, what are our choices? What are the relative merits of those options, however terrible they are, and just to try to relentlessly work through them. And I loved that work, and I loved that challenge, and I had the great experience of working with, these people were heroes, the men and women at the Fed and the Treasury. They were just tremendously talented civil servants. I think the opposite of what most Americans perceive in terms of quality of talent, ethics, and in public service. These people were, not that they stayed up all night for weeks, but they were so creative, and we crafted together from scratch with no playbook, no precedent, a set of programs to keep the commercial paper markets open and get lending going again, which were just extraordinary in scale. And we did them in a very short period of time, and we took a huge amount of risk. I mean, at the peak of the financial rescue, we had a direct risk exposure of $7 trillion or so. It was remarkable, and still earned a substantial return to the taxpayer in that context. So my experience was I had great people around me, and I trusted them. They were very tough on me. They showed no deference to me, as far as I could tell. They pushed back very hard at me, criticized, but that was a good way to try to make sure that we were sorting through the bad choices we faced as well as we could. So nothing enjoyable in crises, hard and terrifying, and the sense of responsibility is overwhelming. But you're there to make choices, and your responsibility is to choose, not to lament the situation you face. And my approach was just, okay, what's next? What's next? And then what? And to keep at it.
And to pursue the Hurt Locker one step further, I'm sure you all seen the movie, the demolition or the bombing expert, when he finally finishes that tour, he realizes he's not complete without that kind of challenge. Through your 40s, you were in the middle of these challenges. How will you be satisfied?
Well, I'm doing fine. I'm thrilled. My wife is sitting over there. I spent a year writing my book and thinking about what I was going to do with my life, and we took 10 trips together. So I'm finding all sorts of other ways to enjoy life, and I miss the people I work with, but I don't miss Washington. It's a pretty complicated place to make, to try to figure out what's right, and to try to focus on doing what's right. It's a very hard place to do it, and I don't miss that.
Two big policy questions before I'll allow at least 15 minutes for questions from the audience. At the end, the bulk of your book is about crisis management, the decisions you were making, the people from different parties, the decisions they were making. And then at the end, you allude more or less lightly to the two big ongoing problems of the actual economy, these being the effects of premature austerity and the ongoing situation of increasing inequality. And the main critics of the administration's policy and of your book have been on both those points, that you individually, the president, and the administration didn't do enough either to re-stimulate the economy or to deal with inequality. Talk first about premature austerity. Is there anything else? The president fed that by talking, he sort of was giving we have to tighten our belt speeches. Tell us about premature austerity, lost production, how you view that entire issue.
Okay, we at the peak in the crisis, mostly because of the recession, not the rescue, the deficit was about 10% of GDP, highest level we'd seen since World War II. Too high, unsustainable, necessary at the time. And there was a big, good economic case that you had to give people, which I agree with still, that you had to give people a sense you were going to bring those unsustainable deficits back down to earth over time gradually. And they had to see a credible path to doing that if they were going to be comfortable taking risk again, investing again, spending money again. But there was a much more powerful fever across the country in the elite media, I would say, and business community, and in parts of the political system that that's something you couldn't delay. You had to do it now. And what happened is we tried 3 rounds of negotiations on a set of long-term fiscal reforms that would balance more infrastructure today for reforms and entitlements and tax reforms over the medium term that would deliver a better mix of near-term support demand and some longer Augustinian restraint on the fiscal side. And what happened is, as you all know, is we got none of the former. We got a big reduction in public investments, and we got a huge amount of poorly designed restraint on the spending side too soon. And so our deficits came down from 10% to 3% of GDP, which is a good thing, but kind of early. And that sucked about a percentage point of GDP growth out of the economy in the years, sort of 2 through 5 of the recovery. So the economy was weaker than it should have been because of that premature embrace of austerity. It was less damaging than I think we thought it would be, because the economy did grow about 2.5% a year over that period of time, but it could have grown 3.5%. That would have made a big difference. But too soon, and maybe as consequentially badly designed, because most of the burden of that restraint came in cutting investments, public investments that are very important to our capacity to grow longer periods of time, and very important to your second challenge, which is our ability to mitigate the very high levels of poverty and the diminishment in the sense of opportunity that we face across the country still.
And is there anything with the benefit of full hindsight that the administration could have done differently in the political circumstances of the time to avoid premature austerity? It's
important to remind even Americans, I think, that in our system under the Constitution, the power of the purse rests with the Congress. And by design, the founders created an executive which is very weak on economic policy compared to really almost any country on the planet, any parliamentary system in certain. So all those things that can make a meaningful difference in how fast we grow, there are potential for growth. And even things like, obviously, quality of education opportunity, the design of the safety net, all those things have to go through Congress. So those questions about what if or if only are mostly a question about whether there would have been a better capacity to try to build a stronger coalition at the center of the political system to deliver better reforms on the economic side. It's hard to know the answer to that question. People want to put a lot of burden on those things to both the president and the Congress. But one way to think about it is to think about, this is Aspen. I'm not sure it's really the real world, but most things people, let's say in the past, have had bipartisan consensus. Let's do infrastructure as an example. Infrastructure's popular until you decide how you're going to pay for it. And when you get to that point, it splits both parties. And all the things that we looked at, tax reform, entitlement reform, or things that would have supported faster growth, they were divisive, not just between Democrats and Republicans, but within those two parties. And the leadership of both parties in Washington were reluctant to split their parties unless they thought there was a high probability that you'd be able to legislate those reforms. If they didn't think there was much probability you'd craft a legislative coalition, they didn't want to split the parties. We'll heal that over time, but until we heal that fundamental fissure in our system today, it's going to be hard to do things that would be more powerful in mitigating these challenges we face.
On the inequality front, the United States is a robust country, a resilient country. It's growing more than most other economies, and yet it's becoming more unequal. In practical terms, what can be done about that?
It's not rocket science. It's things that governments have done and still do in many countries around the world and do quite well relative to us. But it's things that require a capacity to govern, to legislate. So I think they really fall into 2 or 3 types of categories. One is about getting the economy to grow faster. That's very important because fundamentally you want people to be able to work and incomes to rise. And we're way undershooting what's possible and things that will help us grow faster. Second thing is about, let's call it equality of opportunity people face. And a lot of that's to do with the quality of education you have. And part of it's the way the safety net is designed. So we live in a country today where the quality of your education, quality of healthcare you get, just those 2 things depend overwhelmingly still on how poor you are, the color of your skin, things that are about luck and chance and fate. Those things can be mitigated, not completely, with better policy to provide more even outcomes in terms of opportunity in that context. We're so far short of the frontier of what's possible in those areas that these challenges don't deserve a sense of futility, a sense of resignation about them. They just require a rediscovering a capacity to govern again.
So final question from me before I open this up to the audience about the president himself and the administration. Stipulating that you are not a disinterested observer here. You say early in your book and the end of your book too that you told the president that his legacy would be avoiding a second Great Depression, and that he seemed uncomfortable or frustrated by that as the idea of his legacy. How do you, as an informed observer, judge his performance now? What do you think his legacy, as we now know it, is going to be?
Well, again, I'm not a political person and not the best arbiter of legacies, obviously. But what I said is that unless you are able to prevent a Great Depression, nothing else will be possible. And that failure will define everything and constrain everything. And what he said to me when I first said it to him was, well, that's not enough for me. I'm not going to be defined by what I was against, what I prevented. But my view and my experience with him was that he was a tremendously impressive decision maker in all the right ways. He was willing to take risk. He was willing to do things that are deeply unpopular. He was willing to let the merits be the biggest factor in judging what we should do, even if it couldn't affect what we could do completely. And I had tremendous respect for him. And I think if you look at the judgments he made, not just in the crisis, but on their early risky choice about trying to deliver, however messy it is and imperfect still, to deliver the chance of greater health care to a larger portion of Americans, these are transformative changes to the American economy. And I think that they'll, I admire him for being willing to do them. Remember at the time people said, you shouldn't do anything until you get this unemployment down to 5% or something. And I think he was willing to be much more ambitious than that, way to his credit. So I deeply admire him, and no reservations and nothing but admiration for how he governed in my time with him and how he made decisions, how the choices he made about what to do for the country at a time when it was kind of terrible at risk.
I do have one quick follow-up here. Your former cabinet colleague, former Secretary of State Hillary Clinton, was here a couple of days ago. She was talking about the conduct of the presidency, and she mentioned how important it was for presidents essentially to reach out constantly to Congress, of having congressional people come over for chats. It was hard not to see that as a somewhat implied critique of this administration. Do you have any feelings on this particular aspect of the president's performance?
I've been really successful in my last 18 months at never talking about politics and getting in the middle of this stuff, so I don't want to be interesting on that. I could be interesting, I don't want to be interesting on that.
Just say it here, it's just between us, it'll never get out.
Yeah.
Ignore these cameras.
Also, lots of people have spoken to that basic question. But, again, remember that the things that divide Democrats today and the things that divide Republicans and separate both of them, they're pretty, I know to most of the world look pretty small differences, but for Americans they're pretty big. Yeah. And if you've got this deep belief that you could never raise taxes again for any cause, for war, for depression, for recapitalizing a financial system, for healing the safety net for no cause. No cause justifies that act. It's not something you heal over drinks.
Point taken. Okay. So, first question over here. So I'll point to the gentleman in the orange-ish sweater. And so the more concise the questions, the more of them we get in. Yes.
Simply, thank you very much. My question is, given historically low interest rates, tremendous demand for treasuries, why aren't, under you and now under Secretary Lew, going out 50 years? Why aren't you just selling those 30-year bonds, 50-year bonds? Because I think most, unless the economy is going to grow, those are going to be great for the taxpayers of the government.
Good question. For the rest of you, people say we should be borrowing more at longer terms because rates are really low, and overall, over time, you lower the average cost of borrowing for the American public, which is good, which is right. And we did substantially extend the average maturity of our borrowing over that period of time. We're now at a point where we're closer to the average of most countries. How far you should go beyond this, that's a question for my successors.
Oh, somebody over here. So yes, over here and then the middle. So it's here and then here.
How well prepared are we for the next time?
Yeah.
And even given the constraints you outlined of our political system, what would you do differently with that luxury of hindsight? You specifically.
All right. Well, I'll start with your second question. Although maybe this won't be that satisfying to you. Again, the two most damaging things that had the biggest effect on how bad the crisis was and how slow the recovery was were the fact that we went into the crisis with very weak financial rescue authority, and it took too long to make it powerful enough because you had to scare people to death before they decided it was important enough to give us more authority. That failure, that made us late and behind the curve, very damaging. That's why that initial financial shock was 5 times larger at the beginning of the Great Depression. Second was the fact that we lost the ability to do more fiscal stuff, public investments, too soon. So if you're going to replay this over time, you'd want more authority earlier, deployed even more aggressively than we did, and you want to make sure you sustain the response longer. These things, you have to treat these things as if they're a long war. They're not things that get resolved quickly. So that's what I was saying. Your first question is, how well are we prepared for the next one? I'll give you 2 answers. One positive, and I think overwhelmingly on net positive, but one qualification. Most important thing you can do to limit the risk of future financial panics and their damage is to make the system run with much thicker shock absorbers against risk. You can't ever design a system where you have a bunch of people who sit in New York or Washington and they sort of think they can see the future. They can see around corners. They've got over-the-horizon radar. That doesn't exist in finance. A lot of people hope we can design a system like that so that we could let the system run along, but then come in and preempt the next bubble, diffuse it perfectly. That's unachievable because the future's uncertain. What you can do, though, is you can force the system to run with much more capital against risk and apply those much more broadly. And we've largely done that. They're much more conservative, probably 3 times in economic terms more conservative. And more, as important, they apply to a much larger fraction of the financial system, not just to the banks that were 40% of the economy in 2007. We have somewhat better tools for managing financial failure, which is good, too. On the negative side, in that fever of moral hazard fundamentalism while we were doing reform, Congress took away the FDIC's authority to guarantee the liabilities of bank holding companies. That was one of the most important things done in the panic, Columbus Day weekend, to break the back of the crisis. It was not unpopular. Most people didn't understand, didn't know anything about it. But there's a deep belief in economics and occasionally in politics that in finance, it's the fire station that causes the fire. It's not really what happens in financial fires. But their view was we can make fires less likely in the future if you give the fire station less equipment. It's a deeply confused view. But they took away that authority. And we'll need that authority again in the next major panic. Hopefully that'll take decades to come. In that sense, we're worse off. On balance, though, much more stable system. And we'll have bought financially a long period of relative stability before we're this vulnerable again.
Yes, sir, here.
Congratulations on the book. It's the most complete narrative of the financial panic.
She's going to switch the microphone, actually.
I say it's the most complete narrative of the financial panic that I've read. And contrary to all the other books I've read out of the past 4 years, not every paragraph started with I. And it's written in a very self-deprecating way, and I really appreciate that. And I liked it so much, I read it a second time.
Now you're making me nervous.
Yeah.
Well, I learned a lot about economics and finance, but I want to ask you 2 questions. There's still great populist anger about the bonuses to AIG, and great anger about the feeling that Main Street did not get a fair share.
There is that anger, and that anger is justified. And what's the best thing that governments can do in response to that anger? It's to get the economy growing faster, make sure we're doing things to give the average person a better chance at a good education, at a better job, of a longer period of rising income, and a more secure retirement. Those are the best things we can do about that. You know, you can do a lot to make the average person less vulnerable to another calamity like this, and the reforms that we legislated are very good against that standard. But the only thing you can do, I think, is, again, do more to make it more likely that that person who's been unemployed for 12 months gets a job. And that person's children, if they're going to go to a public high school in a city, have a better chance that education is as good as you might get if you were going to school in Japan. I mean, those are sort of basic, fundamental things, and we should do more of those things.
So next, there's a lady in the far back, and then a gentleman over here on the aisle. So those will be our next 2.
Good morning. I'm Ginny Galisa now. And during the first festival, there was a panel of mayors for the cities. And one of the comments that was said was that mayors don't deal with theory or philosophy in the sky, but rather they are boots on the ground, and that there was a lot that the federal government could learn from boots on the ground. So when I hear you talk about predicting out into 30 and 40 and 50 years, how do you merge that?
Well, I'm for concentrated authority with accountability in the positions of executive responsibility. Not constrained by checks and balances and by all the basic protections democracies need. Mayors, many mayors, not all mayors, have that better mix of authority and accountability. And therefore, their people can look to them and hold them accountable for delivering services and things like that. And the higher you go up in government, state level, federal level, you lose that sense because that authority is so much more diffused and separated. And I think that's makes it much harder in that context. So I think there's a set of things where careful about the checks and balances. You won't get better accountability. You won't get better results without more direct authority over things that can affect the average person's life. But anyway, I'm for mayors. I was in I'm very close to one mayor in particular. You guys have figured out who this is. I was in a major city. Some people call it the second city. I was in a taxi on the way to the airport. In the way in from the airport, and I said, "How's the mayor doing?" And this person said, "I'm not sure I can say this without hurting him. I got to be careful."
He has a thick skin.
Okay.
Yeah. And he hears other people all the time.
Yeah,
So.
so I don't know what city that was, but he said that. They said, I'm going to soften this a bit. They said, he's fantastic. He's doing things. They had a little more vivid word for it. But people, we're a country now where people want to see their government doing things, not dumb things, but doing more, and that requires a better mix of authority and accountability, which you have in some mayors.
Yes, over here, gentleman, over here.
Hi. At the time of the crisis, I had been a 5th grade teacher in Prince George's County, Maryland, and there had been a high rate of foreclosures in that particular county. And I know our principal was able to save quite a few jobs with ARA funds, what she kept calling ARA funds, American Reinvestment Recovery Act. Eventually, I left the county to work in Washington, D.C. public schools because they had a better financial, support. I was wondering, do you feel, I know this is speculation, that if the administration had gotten the size of the fiscal stimulus that they had wanted, that we would be in a better place today, or no?
Oh yeah, Absolutely. There's no, I mean, I don't believe there's any credible argument on the other side. Again, just on the basic math of it, that premature embrace of badly designed austerity sucked about a percentage point of GDP growth out of the economy for 3 years, every year. Now you could say that's 1%. It's a lot. It's a big difference. Economy growing at 2.5% on average like we did versus 3.5%, that means millions more jobs more quickly. It means much more faster income growth, and it means more money for teachers in the classroom and more investments in things that affect our long-term ability to grow. So it's a hugely material thing. Now, you know, when you have unsustainable deficits, it's going to be hard to bring them down to earth without causing some damage. And not all reforms and spending is good, but absolutely the economy would be stronger if we'd had a little bit more longer.
So a procedural point, we have about 4 minutes left. I'm going to ask the microphone people to go to 4 or 5 different questionnaires. We'll hear short versions of your questions, and then the secretary will reply, starting here. Yes, so microphone people are going to have to run. So first here, and then, okay, we'll get 4 or 5 of these in, yes.
What is the responsibility that you have now in your new job?
Responsibility and new job, yes.
Does the Treasury Department consider certain asset classes to be at high risk as a result of climate change? Has there been any studies and analysis around that devaluation may be coming for large asset classes as a result?
Your job, climate change, yes, over here.
Can you talk a little bit about the GSE conservatorship, the way it was done, maybe your view on the standing of the preferred shareholders right now, and what does GSE 2.0 look like to you?
Good. Back here.
Can you speak to regulatory arbitrage?
Yes, please, go ahead.
Just have we decreased the number of regulators over the financial industry, and is regulatory arbitrage still a huge problem?
Okay, and now this will be the last one for the lightning round over here. Yes.
Just to bring us out of the U.S., Europe, is the crisis contained, and any advice to European leaders?
You have 2.5 minutes for climate change. Climate change, Europe, your job, conservatorship, and regulation.
Okay,
Go.
see if I get this right. I work for an investing firm in what's sort of the old classic venture growth part of the investing world, which is something that is kind of interesting, consequential. What did the Treasury's departments use on asset classes affected by climate change? I have no idea. I mean, I might have some ideas, but they're their views, not mine. But they're probably your views. They're pretty sensible people there. GSEs, next. GSEs. I don't want to talk about the specific issue about the preferred for obvious reasons, but as I write, and I think as many people believe, over time what you want to do, and this can happen over time, it doesn't have to happen overnight, is you want to put in place a set of reforms that reduce the government's role to a much more modest level. Not to zero, because in a crisis, you're going to need the ability to make sure there's financing available for people who want to buy a home. Otherwise, you face much deeper collapse. But not to zero, but a much smaller role over time. It's not rocket science. It's not hard to do, but it probably requires legislation, and we're having a hard time legislating simple things. What's
regulatory reform, numbers of regulators plus Europe?
There are far too many regulators still. Among the many pieces of unfinished business that we left in place a very balkanized, segmented, complicated financial system. And what that means is rules are much more complicated. It takes much longer time to write a rule, and there's much more arbitrage that exists, regulatory arbitrage, opportunity to take advantage of those rules that would be desirable. Be good to fix that over time. It's not the biggest challenge we face as a country. I mean, you could put many things above that challenge, but it's something worth worrying about, thinking about over time.
And Europe and China.
But China too? I didn't hear China.
I'm adding
That's unfair.
It's in the foreign affairs bucket.
Europe is much earlier stage in the it's baseball season. They don't play baseball there, but they're more like in the third inning, I would say still. A better framework for protecting against the risk of a major financial crisis than they had, but still a pretty immature, untested framework. And they've got a much harder set of growth challenges ahead. Governments, much worse fiscal positions, much worse demographics, much harder challenge in this basic thing that affects how countries grow, which is how easy is it to set up a business, raise capital to run a business, run that business in a way that's economic. Much harder across Europe than it is certainly here. But it's better, certainly better than it was in 2010, 11, 12. China? What about China, Jim? You're like the biggest expert on China. Let me ask you, China.
No one knows. It's a darkening time, so we can discuss that offline. For now, please read the stress test, and please join me in thanking Secretary Geithner.